Bitcoin is close to new all-time highs, and in today's video I will be providing you guys with a potential trade idea that could send Bitcoin to those new all-time highs and that could make sure that you are profiting from that move towards the new all-time highs. Later on in today's video, I'll also be providing you guys with a beautiful trade setup for Solana. But first, let's discuss Bitcoin, guys, because Bitcoin simply is still range bound. I've talked about this range for many weeks now. We have our range low area over here. We have our range high area over here, where our drawn liquidity obviously is the old all-time high. And we have the mid-range level over here. Now, around this mid-range level, there's currently some interesting price action going on. But you always first have to realize, why are we bullish right now? Because we have a first smaller deviation below the range low that is being followed up by a second bigger deviation below the range low. That second bigger deviation led to a strong reclaim of the range low, a strong impulse towards the upside, which also gave us a break of structure towards the upside over here. Now, really swiftly, why is this a valid break of structure? Because the high over here that we broke through was a significant high. Why was it significant high? Because this high brought us to this lower low compared to this low that brought us to that high, making it a significant high to break. So by the double deviation below the range low and the break of structure back towards the upside, and the fact that we have a draw liquidity higher for Bitcoin, we are extremely bullish, and we can start looking for potential execution of a long trade towards that new all-time high. Now, for potential execution, we obviously have to look at the local price section. Now, what is interesting about this local price section is that it's currently taking place around the mid-range. And if we zoom into the 4-hourly time frame, what I always want to do for my execution is first determine where the liquidity is resting. Why? Because as a trader, the first thing that you have to understand is that whenever you start looking at the execution of a trade, you always, and I mean literally always, want to enter where the majority of the market is getting stopped out, okay? Because that's also where smart money will enter, because they need the stops of the majority of the market and use them stops as liquidity to fill their own bigger buy or sell orders. In this case, obviously buy orders, since we are looking for longs. Now, when I look at this chart over here, there's two areas of liquidity that I'm currently looking at. The first one is this big wick over here. Why? Because we can see that we have this fake break of structure and that we have this fake break of structure over here, right? This local price action is leading for a slow grind towards the upside. Now, many retail traders, they are super impatient, right? And instead of looking at the extremes of price action for potential execution of trades, they always want to enter inside of the local range. Now, what they are seeing is a push down, push up, break of structure, and they want to enter longs, right? Why? Because they are impatient, okay? Instead, what they should be doing is identify where there's truly liquidity resting. You have to realize that, yes, guys, we form a lower low over here compared to this low, but it's to that high. So yes, guys, this is a valid break of structure. But you have to realize that the kind of price section that we were looking at over here and the kind of manipulation that we were looking at over here and the break of structure that we were looking at over here, at what time was this price action taking place? Exactly, during the weekend. Is smart money active during the weekend? Are the institutions active during the weekend? Are the bigger players in this market who actually determine what's going to happen to the market and where the market will move towards? Were they active during the weekend, during this weekend range? They weren't. So during this manipulation phase over here to the downside, smart money wasn't active to fill their orders. They were enjoying their weekend. Now, do we think that smart money will let the price move towards brand new all-time highs without them getting into a position? I don't think so. So what does it mean? It means that retail traders identify this as a valid break of structure, which is the case, but it took place during a weekend. Retail traders identify this as a valid liquidity sweep, which usually would be the case, but not during the weekend, right? Which means the retail traders are looking for longs over here or on the pullback. Now, to identify where the liquidity is resting, we have to identify where they are placing their stop loss. And in this case, they're obviously going to use this low as their stop loss, which means that beneath this low, there is important liquidity resting. Now, what I quite like about this low is that this low is basically acting as an inducement for this entire imbalance over here. We have a huge hour 4 imbalance, and I really like that imbalance. Within that imbalance, we also have the top of this breaker block, right? Because over here we were forming supply that gave us this impulse to the downside, and that supply could now be acting as demand again, and the top of the breaker block, the top of the previous supply area, is exactly aligning beneath the liquidity low over here, which means that this definitely makes up for a nice area of interest for potential long positions, right? Now also if we start looking at the potential EMA confluence over here, we can see that the 200 EMA on the 1 hourly time frame is exactly aligning with the breaker. And also on the 2 hourly time frame, the 100 EMA is exactly aligning with that area of interest, and the 200 EMA is slowly but surely also starting to align with our area of interest. And on the 4 hourly time frame, the exact same thing goes for the 100 and 200 EMA. Slowly but surely, they're starting to align with our area of interest. Now, the last thing that we have to do is look for potential invalidation. Now, I think many people would use this low to cover their stop loss, right? Because this is the low that gave us this impulse. But you also have to realize that this is the low that gave us the impulse, that gave us a fake break of structure over here. Why is this a fake break of structure? Because this high over here wasn't significant to break at all. Why? Because the high over here did not bring us to a new low compared to this low that brought us to that high, making it an insignificant high to break, making this a fake break of structure, which means that there will definitely be some liquidity resting over here. So this should not be the low to use as our stop loss. Instead, we could, for example, use these equal lows to cover our stop loss. Now you might be thinking, but Jip, these are equal lows, there's so much liquidity resting right there. That's not always the case. To figure out where the liquidity is truly resting on a chart, you have to figure out what the human reaction is to previous price action, right? Now, price action is showing to me that this was the last fake break of structure that we had, which means that people are identifying this fake break of structure, which means that they think that this is the new invalidation for the bullish thesis. So the people that first had their stop loss resting over here because of, for example, this fake break of structure or this fake break of structure, they have now probably tightened their stop loss from this low to the new invalidation for the bullish thesis, which is this low, because of the final fake break of structure, right? Now also get into the mind of retail traders that are opening up shorts over here within this area, or maybe we'll open up shorts over here in this area. Where do we think that the people that open up shorts are looking to take profit on their shorts? Exactly, at the equal lows. Why? Because they are further away compared to this low. Because they are equal lows, they think that it must contain a lot of liquidity, and it offers a higher RR and more potential profit. And retail traders, they're greedy creatures. So let's say they open up a short over here with their entry over here, stop loss over here. They're not going to target this low. No, they're going to target these equal lows because it offers more profit. Which means that if price is truly bullish, would it give the opportunity to people that open up shorts to take profit on their short? Or would they want to trap the people into opening up shorts and instead reverse it and then target the stop loss of those short positions above this high? And I think the second scenario is the case if price is truly bullish, right? Because if price is truly bullish, it needs a drawn liquidity. And the stop losses of those shorts are a big drawn liquidity. And if shorts get the opportunity to get out in profit over here, their stop loss that was first resting over here will vanish because they will close their position over here in profit, or they will move their stop loss to break even, right? Which is why I think that these equal lows actually make up for a very nice invalidation for a potential bullish setup, in which you could be looking at a potential execution over here, invalidation over here, and then as a target, a brand new all-time high for the Bitcoin price, and that offers an RR of approximately 2.5. Now let's have a look at a potential execution for Solana, because last week during the streams I was talking a lot about Solana, in which we have our range low over here for Solana, and in which we had our range high for Solana approximately over here. Now what can we see is that Solana is indeed breaking out above the range high area and is now entering a potential bullish area, which means that as long as the range high area holds, we could be expecting higher prices, and the price should be targeting some buy side liquidity, in which we have a lot of buy side liquidity resting right over here. Now that means that we are looking at a potential reaccumulation range that is potentially breaking out, and then we are looking for a potential retest play of that previous reaccumulation range to target some buy side liquidity. Now we know that there's always two ways of playing the potential retest of the range high area. There's the way of playing the perfect retest, and there's the way of waiting for a sweep of that sell-side liquidity below that range high, a reclaim of that range high, and then play the perfect retest to target higher levels. Now the second way is obviously the higher probability one, but the first way can only be played if we have a valid inducement above the range high area. Now in this case, in my opinion, we have valid demand that was being created over here during this compression that gave us this impulse, and above the demand area is where we have a valid inducement over here above this range high. Now that means, why is this a valid inducement? Because when we look at the local price action over here, we can see one fake break of structure that is being followed up by another fake break of structure. We know that these fake break of structures, they're engineering liquidity beneath this low and also beneath this low, which means that we always want to enter where other people are getting stopped out. Now, if we're going to get a flush of these stops beneath these lows, I'm interested in buys on Solana to target buy side liquidity, because we can also see that on a 1 hourly time frame, the 200 EMA is lining up pretty nice. On a 2 hourly time frame, we can also see that the 100 and 200 EMA are lining up very nice with our area of interest. And on a 4 hourly time frame, slowly but surely, also the 100 and 200 EMA are starting to line up very nice with our area of interest, which is why I'll be looking for longs if Solana is going to take out these lows, and I'm going to target buy side liquidity. Now for our invalidation, once again, many people will use the closest low to cover their stop loss, but instead we'll be looking for a little bit lower over here for the invalidation for our bullish thesis, in which we can be looking for longs over here, invalidation over here, and as a target, new yearly highs for Solana over here, in which I've touched you guys that we always want to look for take profits at the second to highest high or the second to lowest low instead of the highest high or the lowest low, which means that also for Solana, with this trade, we are looking at a potential RR of approximately 2.36. Guys, PrimeXBT now also offers a lot of crypto futures trading pairs, so definitely go and make sure to check them out. The link can be found in the description. If you sign up through our link, you also get a 7% beautiful deposit bonus.